Inside America's Boardrooms, the informational show for board members and corporate secretaries. Brought to you with knowledge partners NASDAQ, the Center for Audit Quality, and PwC. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, R.R. Donnelly, and the Society of Corporate Secretaries and Governance Professionals.
Welcome to this edition of Inside America's Boardrooms. I'm your host, TK Kerstetter, the CEO of Boardroom Resources, and it's my pleasure to welcome you to our inaugural show where we are going to take a look at how we can help make directors and boards more effective with their duties to companies and shareholders. I've been in this space for about 20 plus years, and it's a pleasure, and I must thank the NASDAQ stock market for collaborating with me and lending their beautiful studios here in Times Square for us to continue to do a show that helps directors, again, be more effective. And who better to be my first guest on our inaugural show than the person that's going to keep me in line, but also knows a lot about helping directors. And let me welcome my guest for today, Ann Cloyd, who's the leader of PwC's Center for Board Governance. Mary Ann, welcome to the show.
TK, it's great to be here. Now, keeping you in line, that's a big task.
It's a big task.
It's a big task.
But, you know, as usual, we're going to be doing a show each week, right, and we're going to be looking at topics that are very pertinent to a director's responsibilities. That's what you guys do every day.
Every day.
You're going to be good for sort of making sure that we're covering all the critical topics. And to start with, for the first show, I think we've picked something that is going to be reoccurring all year long, and that's sort of preparing for the rise in activism. And I really didn't think a year ago that this would sort of be the topic du jour, you know, for this year, but I have a feeling with all that I've seen that that's the case. I agree. We have seen the New York City Comptroller put out at least 75 requests that companies give consideration to proxy access. We have seen Pershing Square be active. We have seen Trian Partners and Nelson Peltz be active. And with all the money flowing to the hedge funds and all that's happening, I think it's safe to say that this year is going to be maybe like the late 80s, you know, and certainly it's going to be a year for activism. And the sad part is, you don't just have to be a poor performing company to be in the crosshairs.
Not in today's world.
So would you agree that this is a great topic?
I agree with you completely. I mean, it's certainly something that as we are out spending time with boards, with C-suites, I think it's top of mind for everybody today, TK.
And we'll talk about, you know, what PwC has done with this, but I think maybe the best place for us to start is we need to sort of define, you know, activism is used, it's sort of a broad term. Why don't you start first by seeing if we can put our arms around some definitions of activism.
Yeah, TK, thank you and happy to. And I'm glad you brought that up because I think so often when people talk about activism, they do it as this broad generic term, and the way that we're defining it, that I like to define it now, is actually looking at it essentially along the spectrum. So at one end of the spectrum, I mean, I think you can consider the say on pay vote a form of activism. I mean, as everybody probably watching this knows, mandated by Dodd-Frank, but essentially it gives every single shareholder the right to vote on the CEO's comp. So again, if you take it that's activism at one end of the spectrum, I think next to that you would have shareholder proposals. So we've certainly seen a lot of that in, you know, certainly in the last few years, TK, where you've got people coming in to make proposals, typically or very often on governance matters. So whether it's the shareholder proposals in terms of wanting to deal with separation of chair and CEO, to political disclosure, to majority voting, to some of the others which are into the social aspects of wanting that type of disclosure, you know, that's certainly been out there and not new. I think as we continue to go on the spectrum, we've got, again, something we've seen in the last few years, and that's the Vote No campaigns. So when shareholders, for whatever reason, have not do not feel like they've been listened to or are not happy with what's going on. I mean, you've certainly seen the campaigns to vote no, and whether that's voting no against an entire board, whether it's voting no against a compensation committee because they're not happy with what's been done on the pay packages, to voting selectively against certain directors, all the way to the other end of the spectrum, which is, I think, one of the things that you touched on, and that's the true hedge fund activism. Now, I've got some statistics here, TK, because you had mentioned about the increase. During the past decade, activist hedge funds have increased, with the total assets under management now exceeding $100 billion. And I think this statistic's almost a year old now, so it wouldn't surprise me if it's more. And that between 2003 and May of 2014, 275 new activist funds were launched. So, yes. In answer to your question, yes.
Yeah, I mean, we're seeing it in all phases. And what's interesting is one of the related topics, which we won't delve into too deeply, but that certainly relates to this and maybe has certain activist groups sort of pleased, is the trends that have emerged in proxy access, the private ordering. And as we all remember, this was defeated originally in the courts, led by the U.S. Chamber, and eventually it was ruled illegal to institute, and that was withdrawn. That was sort of across-the-board proposal. Now we have it where it is permitted company by company, and that's what the New York City Comptroller is doing that. Well, all of a sudden, some very prominent companies like GE and Citicorp and Prudential Financial.
And that's just this year.
Yeah.
What you're describing has happened in the last 2 months.
They've said, okay, we're going to preempt all this noise and we're going to go ahead and put in a process for proxy access. And when a major company like that goes ahead and says, ahead of the market, if you will, saying, okay, this makes sense, I'm going to go ahead and do that so I can take that issue off the table, for shareholders, not only will people follow normally, but shareholders will use that, well, if these companies that are always been respected in their governance do it, why won't you do it? So I anticipate that that's going to be a trend that is really going to snowball this year. Because
the pressure will continue
exactly
on the companies to do something.
Right.
Right, and to do something with similar parameters.
And then right behind that, which none of us have enough knowledge yet to understand exactly what the impact is going to be, is this universal ballot, which basically says, now I don't have to vote just for the company slate or just for the activist slate. Now I can mix up and sort of vote for who I want to vote for. And we really don't know what the impact is going to be with that, with trying to have the right skill sets on a board, or what does it cost, or anything like that. But the combination of the two just are another sign that if you aren't prepared, if you aren't reaching out to your shareholders, if you aren't giving thought as a board to what all this means to you, you're really making a mistake.
Yeah, and TK, can we talk about the proxy access, some of the proposals, just a little bit more so that all of your viewing audience, because what we've seen in some of the others, or we've seen some companies who, when they received proposals, responded with their own proposal, but with different parameters, for lack of a better term. So in other words, if there was a proposal that came from a shareholder that says, we think anyone who's owned 3% of the stock for at least 3 years should have the right to elect 20 or 25% of the board, which is, I think, where it's sort of where it's gravitating and where GE's ended up. I think we had some companies out there that were at much different parameters. So saying that you had to have a larger stock ownership for a longer period of time. And part of what happened with that is the SEC initially granted some no action letters or a no action letter, right, saying that because management had its own proposal, that in essence you had competing proposals and it wouldn't go forward. But then I think that there was a lot of outcry in the investor community about that, and the SEC announced earlier this year, Chair White did, that they're basically stepping away from issuing those kind of no action letters right now. So I don't think, but to your point, I don't think we've seen this play out yet.
Well, and you know, time will tell on that, and you know, again, I expect that future shows will be digging deep into this issue because it's a hot issue, you know, to talk about, particularly the universal ballot issue. But
well, it is, and you and I have both, you know, spent time with a number of different investors out there, different shareholders, and certainly without naming names, something I'd never do. I mean, I have heard more than one say that this is very important to them because they feel like it is their shareholder right to be able to nominate directors, even if they didn't use it, right? The ability to do so if they felt that they needed to.
And that's a trend that we've felt for some period of time. But so let's get back to the activists specifically. What should boards and companies be doing today to prepare themselves? Because I think that's what we want to leave with our audience.
We do. And TK, can I just emphasize one point just with a little bit more detail that you made early on, and that's that it's not just poor performing companies today that activists are coming after. So if we take it to that one extreme, the hedge fund activists, I mean, a lot of times what they're looking for companies that essentially what they have is market value, or that they have a low market value relative to their book value. And so they may be looking that somehow the parts of that company, if they were looked at separately, might be of greater value to the shareholders. They're looking for companies that have a large institutional base, because typically if they're going to go into this, they are going to be looking to get support from those other institutional shareholders. They probably are looking, most of them are looking at companies that have decent operating margins, decent operating profits, you know, good cash flow. And maybe when you add on to all of that, maybe looking at their boards and looking at ones that in their opinions or views don't necessarily have leading or what they would consider best governance practices.
Right.
So I think that's important to understand in terms of,
you know, certainly the issues of the stale board, board that's not acting in any way, or that can't pass the say on pay or whatever. We all know that they're vulnerable. Okay, but take through the sort of the who, what, when, where, and how, and what companies need to think about themselves. And then I want to talk to you. I know you guys have done something with an actual piece and an interactive tool.
We have. And thank you for that, TK. So I think in terms of what can a company do, you know, I'd say number one, it's prepare. And preparing may, you know, I would say simplistically, is looking at yourself as somebody from the outside, as an activist might look at you. That may mean that you need to look at your data in different ways. You know, you think about all the data that a board gets in terms of doing their oversight roles. So really looking at whether or not some of it might need to be aggregated in a different way, and what any of the knock-on effects of that could be. Know who your investors are. So again, going back to what we just said, that if you've got an you know, again on this extreme of the hedge fund activism coming in, they're probably going to be looking to companies that also have some institutional base. And as I've heard many of them say, they can't do it without getting those investors, those other investors on board. So really understanding your base, looking at some risk factors, and you'd mentioned a tool, we can talk about that a little more. And then having a shareholder engagement plan. You know, you mentioned that. So really knowing that how you should engage, when you should engage with your shareholders, so you can be telling your side of the story.
For years we've been talking about know your shareholders.
No, exactly.
Develop an engagement plan, because you just can't, it's not satisfactory anymore to just lay low. I mean, you can't wait until you need to call on those shareholders. You need to be reaching out and establish a relationship before you need it. And
in some cases that may mean some complement of your directors also.
Correct.
Because certainly with, again, what we are seeing with a lot of this, when the activism starts, they want to hear not just from the CEO, but also from the oversight side, from the directors.
And particularly when you're talking about CEO pay. No one wants to hear the CEO talk about their own pay. So the comp chair better be ready to have some presentation skill sets, because they're gonna be asked to cover an issue like CEO pay. So as we wrap up here, tell the audience a little bit about your piece, where they can get it, and what you hope to launch in the way of this interactive tool.
So, thank you, TK. So we have just published, together with the PwC Investor Resource Institute, a piece called Shareholder Activism, the who, what, when, and how. And it can be found on our PwC Center for Board Governance website. It is like so much of what we publish, 7, 8 pages written in plain English, but really gets into what you and I talked about, the spectrums of activism, all the way to the things that you can do to prepare, a little bit about what you can do if an activist shows up, and then even a page on life after activism. We're also working on and hope to launch very, very soon, essentially an interactive tool where you can go in and ask questions about the company, and depending upon your answers, will then, sort of rate a high, medium, low risk.
Thank you again for covering this very first topic that we've had. Okay, I just have a feeling that we're going to be at this table talking about activism for some time, that we're just getting to see that. I also want to let the audience know that we will also, when that interactive tool and the publication is ready, it will be on our website as well, and we'll publish that information for you at a future show as well. So make sure that you can get that. And Mary Ann,
and TK, thank you for having me here.
It's my pleasure, and thank you, NASDAQ Stock Market, for again giving us the opportunity to bring this show to you. That will conclude this edition, but we are going to be here every week covering a topic that will be helpful to you, help you be a better director and a committee member. So join us each week, and thank you for joining us today.
Join us again next week for Inside America's Boardrooms, brought to you with Knowledge Partners, NASDAQ, the Center for Audit Quality, and PwC. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, R.R. Donnelly, and the Society of Corporate Secretaries and Governance Professionals.